which looks like its own digital monopoly, and you could bolt it on to a company that's growing not, 0 to 5% a year. That's not a monopoly. So we did that. Then Bitcoin surged, and we could opportunistically raise money via the convertible bond market. And we raised $650 million at 75 basis points. And then we raised $1 billion paying 0% coupon. And that point, I would say that stage is opportunistic. Like someone wants to give you billions of dollars of free money to actually invest in your business. Why wouldn't you? We got on the roller coaster and went up and down. If a rich person looks at the iPhone, how many do you want? One. You want one Tesla, one iPhone. But if I offer you a security that gives you twice the performance of the S&P, how many of them do you want? Like all until you hit your risk rail. So now I would say we're a Bitcoin treasury company, right? Where our operation is we take crude crypto capital, Bitcoin, that's a commodity, and then we sell you an equity which is like 2x Bitcoin. And then we get to 2x by actually selling bonds and selling fixed income instruments that are half x or half of what we're doing, and we strip the performance and the risk off the bottom of the capital structure. We put it onto the top, and that way all the degenerate traders get what they want, and all of the risk-averse investors get what they want, right? And we're just the institutional gateway sitting in the middle.
It sounds like the way that you're describing this stock now, MicroStrategy was a software company. The way you have described it, it sounds like MicroStrategy is
S&P. It's been that way for a decade. It's been that way for the past 4 years. Okay, if you're a convertible arbitrager, there's an entire convertible bond market. What they do is they buy your bond and they sell your equity and they extract the premium. For that, there's a $340 billion market that does that. For that trade to work, they need your vol to be 45 or more. So you need to be 3 or 4x the S&P. And of course, MicroStrategy's got a vol of 100 to 150. And that's because we lever Bitcoin, which is a vol of 60. So if I take 60 and I double it, I'm 120. So we have extremely high volatility. What else do you need? Liquidity. What else do you need? Durability, right? GameStop's interesting, but it's not durable. You see, sometimes there are meme stocks that are very liquid and volatile, but only for a week. What if volatility is like fire. I'm starting a fire. I'm burning the fire for a long time. And that's exactly what's happening in this market. We're basically accelerating the investment cycle from 5 years to 1 week. Bitcoin is the unique radical actor here because Bitcoin is the first product that's a commodity. That's a legal definition, an asset without an issuer. And it's economically a scarcity. That is a common sense definition. It's a commodity that you can only make 21 million of for the next billion years. So there is no legal commodity that's also a scarcity other than Bitcoin. And if you don't have a commodity that's a scarcity, you can't do this with 100% of your capital in a public company. Yeah, like you can't do this with a security. Like I couldn't do this trade with NVIDIA stock. Even though it's a great company, NVIDIA stock is a security. So I could never own 100% of my liquid capital or have it invested in NVIDIA. So if you wanted to do this before Bitcoin, you had to do it with gold such that the bonds never get paid back other than they get equitized. And if you look at my situation right now, I have about $40 billion of Bitcoin. I have about $7 billion of bonds. 4.2 of them are already equity. I mean, they're already effectively equity because they're trading not just above the strike price, they're trading above the call price, which is 130% of the strike price. So we could, generally sometime in the future, just call them all for equity and equitize them all. So there's about $3 billion of a convertible bond on a $40 billion structure, which is zero coupon, which there's some theoretical risk that there might be more dilutive than the minimum strike. But the other point to make is these are no recourse unsecured notes. There's no lien, there's no claim, there's no EBITDA covenants. I think we pay like 30 30 to 35 million in interest on 7 billion in debt, Scott, a year, but then you will lose money.
And you're not suggesting anyone does that. Yeah.
And then if you ask the question, well, how does MicroStrategy look at it? My answer is, I'm selling the volatility. So for example, if I sell $1 billion bond, I'm capturing an 80% spread up front. So I'm making $800 million in Bitcoin. If Bitcoin crashes by 80%, then I was neutral, right? So if Bitcoin went to 20,000 tomorrow, you could say, you didn't make any money on that. But if Bitcoin doesn't crash 80%, I made 800 million. Now, if Bitcoin goes down 20 or 30 or 40%, Bitcoin's volatile. My stock is twice as volatile. I'm going to refinance it and sell the volatility. And the theoretical value of having $1 billion of volatile asset is like 100 million a year. Like for example, all I have to do is hold the $1 billion and then sell the vol, and we probably make another 500 million to $1 billion, even if Bitcoin doesn't go up. It's kind of like just getting Alaska or the Louisiana Purchase for free. They could pretty much have 20% of the network for free overnight, just with a swap. They could even print the money. They could buy it for next to nothing. The only alternative to the treasury bill for anybody is Bitcoin. And so just do that, and Bitcoin becomes the world reserve capital network, and the U.S. will own both sides of the equation. They'll own the currency and the capital. But the second observation is the U.S. ought to just standardize stablecoin legislation and let people issue digital currency backed by U.S. treasuries, like Tether, like Circle. If the United States created a digital assets framework and they just let corporations and banks issue digital currency, and you just say, if you want to issue digital currency, you have to back it with U.S. dollar equivalents, which means T-bills, right? And a U.S. custodian. If they did that, the digital currency market would grow from 150 billion to 10 trillion. And I started becoming a tech believer in it. But then I emerged as a maximalist, Scott, which is, you wrote your book about the four. And at the end of the book, you basically are a little bit jaded. You're like, these guys got too much power and they abuse their power, and the world's not a better place for that. That's because they're companies. And if Bitcoin was a company, if it was a big digital banking network, it probably also gets corrupted. What I realized is Bitcoin is a decentralized protocol. It's a commodity. It's ethically superior to a company. It's ethically superior to these big tech companies because it represents a protocol of economic empowerment for 8 billion people and everybody on earth, regardless of your views. And so I basically went from opportunist to investor to maximalist. And now I'm of the opinion that the human race moves forward through clean energy, clean food, clean money. And human misery was our water was dirty, our food was dirty, we didn't have energy, we had dirt and religious differences. I get that. What it does is it gives people a working economic fluid that doesn't drain 10% of their economic energy per year out the back door. And so I'm a big advocate for digital capital in the same way that 150 years ago, maybe I could get really excited about spreading electricity to the world. But if you found fire, you would want people to know about fire. And, Henry Ford, as I said, he put the fire in an engine and he gave us wings. He let us fly. And so the world's a better place with the automobile or the plane or aluminum or steel or computers or AI or whatever it is.